Hey, Greg here. I wanted to cover some mindset stuff for you guys and what I'm calling my two tenets of options trading. And I think this can really help you out as a trader, whether you're a beginner or experienced. So let's get to it. Hey guys, Greg here. So I titled this video, Expect to Fail and You Will Succeed. It's a little bit of a mindset video and then also some practical application at the end. You know, when I first started trading options, I expected every trade to be a winner. I internally obviously wanted every trade to be a winner. All of us trading options want every trade to be a winner, but to expect every trade to be a winner is only going to lead to disappointment and frustration, and you're going to want to quit. That's what I see happen to a lot of beginning options traders, is that they have some failures at the beginning. Maybe they have a little success, but they have some losing trades, and they just think, well, this doesn't work. I don't know how to do it. The person giving me the trade recommendations doesn't know what they're doing. And so I give up. This stinks. I wasted a bunch of money. I hear that all the time. I see kind of that victim mentality. I hate to describe it like that, but that's really the best way to describe it. Is that you feel like, you know, I paid money to be in a program or to get some information, and I lost on a trade, therefore it's that person's fault. And really the nature of what we're doing is, you know, the nature of options trading or trading stocks or anything really, it's nobody's fault. We're dealing with the best information possible. I truly believe that all these people providing trade recommendations want to win. They don't want to hand out losing trades to their subscribers. It doesn't make any sense. It's not a very good business model. So to think that someone's, you know, just providing you false information or bad information is just not true. I think really where the gap lies is just experience, and that's something that I've gained over the last couple of years, and I can, you know, through the Facebook group and through the YouTube channel, hopefully share a little bit of the ups and downs that I've gone through and that our members have gone through, and we can work together to all improve as traders, because that's really what we need to do. Even in these programs that some of us are in that, excuse me, we get spoon-fed trades, you still have to know, when is it okay to get in, when should I get out, when should I cut my losses, when should I take my profit. Those are all things you learn over time, and you learn by making mistakes. So I'm here to hopefully try and shortcut some of those mistakes for you, because I've certainly made a lot of them. I've lost a lot of money doing things I shouldn't have. I've missed out on money that I could have had just because I didn't know what I was doing. It happens to all of us. You can't be afraid of that. The big thing is that you have to expect each trade that you get into to lose. I think that's a big mindset shift that people have to undergo, is that, you know, if you've got $1,000 in your account, don't put $995 into a single trade, because if you lose that, or lose half of it even, that's a big blow to your account. So you really have to scale to what your comfort level is and what the amount of money is that you're willing to risk from your account. And sometimes we get trade recommendations that the option contract prices are just really high, and maybe it's going to take up 50% of your account to get one contract. That may be a case where you just need to sit it out, go on, you know, sit on the sidelines and wait that one out till we can get an option contract that's more in your price range, that doesn't risk so much of, you know, what you have available. Another big option that people just ignore me on and discount is something that I still do to this day, 2 years later, is paper trade. Use a simulator. If there's a trade that you can't get into, people think that there's no value in using a simulator. I'm not going to make any money. Why would I waste my time doing that? I've learned so much from using the simulator, and just, you know, I'll do scenarios where, oh, I think I can get into this contract, but I'm going to have to overpay a little bit, but I think that's okay. And I've discovered situations where, ooh, I shouldn't have overpaid. I was too close to expiration. I paid too much of a premium. Time decay really bit me in the rear end there. You know, and I shouldn't have done that because that didn't work out very well. Or the contract expiration is further out and things kind of rebounded and I overpaid a little bit, and hey, it still worked out great. You know, I got a 20, 30, 40% return on my investment. You can learn those things through the simulator. I know that's frustrating for people and they think it's a waste of time, but I really don't think it is. I think back to high school. I was a pretty good tennis player in high school, but it wasn't from natural ability. I spent literally 6 days a week, 2 to 3 hours each day in a club with an instructor working on it. Like, I practiced relentlessly to become a good tennis player for the few matches that I had every week. And, it's not just me, it's anybody in any kind of sports or competition. They know that the practice is where the true value is. And the same thing with trading. I really believe if you practice, you can become a lot better at it. And I think you just need to kind of tone down your expectations maybe a little bit, and also tone down the amount of money that you're using if you're a beginner. That way you're not risking as much. So I'm going to jump over to my whiteboard here. I have a new toy I'm super excited to play with. And we're going to go over two, I'm going to call them my core tenets of trading right now. And the first one is, and this is especially for beginners, really pay attention to these. The first one, we're going to call number one, stop the bleeding. So we'll call this stop the bleeding. What do I mean by that? If you are on a sinking ship and you're just determined to hang on because you think it might pop back up, we know how that story is going to end most of the time, and it's not going to end well. And a lot of people, I did this a lot when I started trading options, is that a trade would start going down, 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 and I would think, it'll turn around. I think I can get my money back out of this, or I'll wait till it breaks even. And 99 times out of 100, or maybe 9 times out of 10, we'll call it that, because there is that 10% where it may turn around, but don't plan on it, is the short story here. So stop the bleeding. Any trade that I get into, for the most part, I have a 20% stop loss. Some of them, I cut it off at 15%. What does that mean? If I get into an option contract and the expiration's further out, I may give it 20% wiggle room. But if that trade goes down 20%, I exit out. No questions asked, I'm done. If 2 days later that rebounded and went up to 100%, so be it. I'm not going to worry about it. But I'm protecting the fact that 20% loss could turn into an 80% loss. And if you do that over and over again, it's not a good thing. If the expiration is closer, say within a month, I tend to stick to a 15% loss. So if it goes down 15%, I exit out. Now, there is a little bit of a caveat with these stop losses in that sometimes the market can go crazy within a single day, or there's a lot of liquidity on a certain contract. The volume is huge. The volatility might be big. And so you may see it bounce around a lot, and you really just need to learn this over time and pay attention to each trade, where you may see, you're up 5%, you're down 10%, you're down 12%, you're up 2%. We're all within a period of minutes. And so you may see it drop down 15%, and then 30 seconds later, it goes up by, 5 points or 6 points. So do I always absolutely just cut it off 100% when it drops 15%? No. If I think it's bouncing around quite a bit, then I will watch it. But if it's trending down and it goes from 15 down to 16, down to 17, 18, 19, 20, and it continues to do that, then I'm done. I get out. And then I don't have that stress on me of having to stare at it, hoping over the next day or whatever that it goes back up and I get my money back or I make a profit. I just move on to the next trade. This is a hard thing for people to do. It's still hard for me to do. I want to hang on for dear life. I want to hang on to that sinking ship sometimes. It's just not a good idea. Just take it from me, and a million other traders will probably tell you the same thing. So tenet number one is stop the bleeding. Let me delete this here. Oh no, there it goes. So tenet number 2 from me today is don't be greedy. This is another hard one to learn. I still struggle with this. I look for a profit of 20%, sometimes 25%. You want every trade to go up 100% or more. You do have those happen. I had one on, American Airlines or something a couple weeks ago that went up 260% or something crazy like that. So it does happen. Is it going to happen on every trade or even frequently? No. If you take a 20% win on any trade that goes positive and you do that over time and you only take 15% losses on the ones that lose, and you figure that most options traders are in that 70% win rate, I'm not going to sit here and figure out the math, but that's a pretty good deal in over the long haul if you're just taking 20% profit and closing out. And again, the same rule applies where I will watch and see what's going on. If I can't watch, if I can't be there to stare at the charts or at my computer, I will set automated rules in place to usually take a profit at 25%. That's when I bump it up a little bit. I typically won't go higher than that because I can't expect that. But if I can sit there and watch the chart and see what's happening in the market or with that particular stock, then I may let it run for a little bit. And that's where sometimes you get into those 40, 50, 100% wins, is if you're able to monitor that trade and just see where it kind of goes. And again, I tend to focus more on some of the shorter term day trades. So I like to get into these trades that are going to move quickly. Sometimes we get into some of these programs and they provide more of the swing type trades where you're holding it for a week or a couple weeks. The same rule applies for me. If it goes up by 25%, 30%, I'm done. I'm out. I mean, that's a great win. Where you get into trouble is it goes up 30%. You're like, ooh, it's going to go to 100. And then all of a sudden it just tanks. I've had that happen more times than I can even remember in the last couple of years, where I've watched a contract price go up or to my favor. You know, I'm up 20, 30, 40%, and then all of a sudden it just goes the other way, and I get into the other situation where I'm holding on to the sinking ship. So don't be greedy. If it goes up 40% and then starts to turn the opposite direction, I usually just get out. I mean, that's a great win. Even 20%, 20% on every trade, if you take frequent trades or even, only a couple of trades a month, that's a pretty good win over time. And then as you get more comfortable doing this and kind of figure out, what your win-loss rate is or how you're doing over time, then you start buying more. Then you start reinvesting your profits and adding more contracts to your orders and things like that. That's where you start getting into bigger money. One of the guys that I follow, I'm in his, quote unquote secret trading group. I'm trying to get access for you guys. I haven't quite secured it yet. I'm still working out some sort of deal with him. But one of the programs I'm in, this guy's just an absolute monster. He's a rock star. A couple of weeks ago, he had a $108,000 profit day. He's regularly had, $25,000 to $40,000 profit days. And he's doing the same trades that I am, but he just has a lot more money to invest. And you can get to that point. I know I'm going to get to that point. I'm determined to get to that point. It may take me a couple years, but I'm okay with that. This isn't an overnight success type of thing. I don't believe that. I believe anybody has to invest the time and effort to learn this as a skill, because I wasn't born as an options trader, just like I wasn't born as a tennis player back when I was in high school. I had to work at it. I had to work hard at it. And that's something that a lot of people don't want to put that effort into. And they're the ones that will complain and whine and blame everybody around them except the person in the mirror. And they'll quit eventually is what they'll do. And it's sad that happens. But I created, the Wealth Builder YouTube channel and the Facebook group to try and help people and steer them towards a path of success, because we're all going to struggle. We're all going to fail. We're all going to lose on trades. You have to expect that. And as long as you're okay with that and you know how to deal with it, then you can be successful in the long run. I truly believe that. I believe that for everybody in my Facebook group, everybody that watches this YouTube channel. Stick to your rules. And if you have any questions, post in the comments below. Hopefully this wasn't too much of a preachy video. I tried to not go down that path too much, even though you kind of have to a little bit with some of the mindset stuff. I just wanted to provide some value and kind of some of the rules that I live by. Hopefully this helped. If you have any questions, comment below. If you're on YouTube, please subscribe to the channel. That helps out quite a bit. And then you see future videos. And always ask me if there's any other videos that you'd like to see, and I'll do my best to get them on my list. I have a long list right now. There's a lot more coming in the next month. I'll talk to you guys soon. Bye.